Good morning, my loved ones, guys. Friday morning, and we got some good stuff to cover here before the open. So, morning focus list, guys. We're going to talk about whether or not you should buy the freaking dip. We're going to talk about the 21 EMA and the reversion to the mean. We're going to talk about the volatility index, my Lulu earnings trade, Tesla, and Beyond Meat. So let's get jumping into it, guys. Friday morning, we want to finish the week out strong. It's time for me to start waking up the Focus Trades members here. I don't gotta hit him with the caps. We're gonna be that aggressive. And I'll be live with those guys in about an hour, going from about 8:30 till the first, hour of the session. So we'll be putting in a couple hours of hard work. But for today, guys, right? As you all are well aware of, we get a nasty pullback here yesterday in the market. Now, keep in mind, guys, right? During the course of a nice uptrend, typically what takes place is that, we kind of run away from the 21 EMA, and then we get the nice healthy pullback. That's known as the reversion to the mean. You make another leg to the upside, another healthy pullback, another leg to the upside, another healthy pullback. But what's taken place here over the last 3 or 4 weeks, guys, is that we're just trucking forward every day, and you got the reversion to the mean, but it happened all in one session. So obviously everything was super ugly yesterday as the market came down to that 21, and we ended up closing beneath that level. So typically, guys, during the course of a nice healthy trend, right, just kind of the normal day-to-day business of the market, these pullbacks towards the 21 can be awesome entries to establish some fresh long positions. However, that's kind of contingent on the market actually holding above the 21 and continuing that trend to the upside. So understand that to the extent that we begin to trade underneath the 21, we could, quickly scratch and claw our way back up, or team, trading underneath the 21 could be the beginning of a bit of a reversal with more so momentum to the downside rather than the continuation of the trend. So with all that being said, guys, as far as key levels to focus on for the market, and I think you might want to be a little bit patient buying the dip here, we're looking at the 21 EMA. And remember, you guys can do this on the SPX, you can do this on the SPY. I'm just doing it here on the ES. But guys, we're looking at, let's call it 30.45. That's where that daily 21 EMA sits. And yeah, we're cracking above it here this morning, but we want to be patient. There's no need to rush, guys. If we end up going back above the 21 and we just continue the bullish momentum to the upside, you're going to have plenty of time to play that. What you don't want to do is come jumping in here too quickly this morning. The market then rolls over back underneath the 21, and that is when things, guys, could get a little bit ugly. So two key levels for me are going to be that 21 EMA right around 30.45, and then the 200 period moving average, guys, right down here around 30.10. That is obviously a big kind of psychological level of support. So I'm going to keep an eye on that as well. So I'll make that yellow to match up with the 200. We'll make this level up here, blue, to match up with the 21 EMA. And then for today, guys, right, I can get rid of those moving averages now. Just get a nice clean chart up here. And these are kind of the levels, guys, that I'm going to use as a gauge of, potential direction for the market here today, as well as leading into next week. So if we take a look here at the hourly chart, we're getting a nice big bounce here this morning, guys. Anything could happen. Typically, after a really aggressive day of selling like yesterday, these bounces tend to get met with more selling pressure. So again, guys, we're not going to miss anything. If we do rally back up towards these highs up here, you're going to have all the time in the world to play that. Be patient and let the market prove itself, right? If you want to get back to go into the long bullish trades, maybe you make a rule for yourself, right? Saying, I'm not thinking about jumping into too many longs or any longs until the ES or the SPY begins to close. The key word is close there, above the 21 EMA. I want you guys to be patient, right? If we make a reversal and we go right back to the bullish momentum, I promise y'all, you're going to have more than enough time in the world to play that. So don't be the first guy to the party here, because if we roll back over, we could be headed right back down towards those lows from yesterday, right back to that 200, and then who knows where we go from there. So please keep that in mind, guys. And, charts and candlesticks can be a little bit misleading. What I think you guys should definitely focus on here today, and I'm going to be all over the Focus Trades group in our live stream to focus on this as well, is the volatility index here, guys. This is very important as far as gauging what's most likely going to happen after an ugly ass drop like yesterday. And I want you guys to observe something here. I'm going to pull up the 21 EMA for volatility. Now check this out, guys. The last couple of times, over the last, let's call it 2 or so months, the last couple of times that we've seen these little spikes in volatility, they were taking place when the market was pulling back to the 21. As you guys saw from looking at the chart of the SPY there, we pulled back to the 21, we continue back to the upside. Each time we pulled back to the 21, we got confirmation, guys, that it was just a dip and not the beginning of a reversal due to volatility quickly fading back, right? We get another spike in volatility, the market again fades back to the 21, but as volatility quickly leaves the market goes back towards the upside. Same thing here, guys. So obviously, market's down 5% or so yesterday. You're going to get a big spike in volatility. For today's session, guys, heading into next week, pay very close attention here to the VIX. If we continue to spike aggressively, that leads me to believe that there's more momentum to the downside to come. If volatility, just like we did here, and here, and here, if we begin to roll over and fade back to the downside, we can get a sense, guys, that there's not much panic or fear in the market, even after an ugly drop like yesterday, and we could see the market continue back towards the upside. So those are the big picture things I would think you guys want to focus on here, just to get a sense of what potentially is going to happen next. Keep an eye there, guys, on volatility. Keep an eye here on the index as it relates to that 21 EMA as well as the 200 SMA, and you can keep yourself out of trouble. So a couple other things, guys, here. Did an earnings trade last night on Lulu, and you should be getting familiar with this if you've been subscribed for a while. If you're not subscribed already, guys, definitely go ahead and do so. The common trend here this earnings season, guys, has been that the big money is pricing in any kind of irrelevant news before the earnings announcement. Then earnings comes out and the stock goes absolutely nowhere. Multiple examples this quarter. Netflix, huge pump into earnings, goes nowhere after the announcement. Amazon gets a huge pump into earnings, goes nowhere after the announcement. Restoration Hardware, same exact thing here, guys. Netflix did the same thing. All kinds of examples. So Lulu was looking like one of these things, guys, where they're pricing in any kind of good news, right? They're just bringing this thing up to what they think is a good value before earnings. And mind you, as earnings is approaching and the market makers are pricing in their expected move, you're getting ridiculous premium on the out-the-money calls and the out-the-money puts. So what I did here, guys, is an iron condor. Put this position on last night before earnings, shorting 285 puts, and then to the upside, shorting the 345 calls. What I'm looking for here this morning, guys, is an open anywhere above 285 and anywhere below 345. This wasn't a directional trade. I'm not saying that they're going to beat earnings, miss earnings, go higher, go lower. More so, guys, I'm just placing a bet that they're not going to make a bigger than expected move. So I shorted options a little bit further out the money than the expected move. And because of all the big premium there, guys, prior to the earnings announcement, now that earnings has passed, and if the stock does not make a bigger than expected move, all of that premium that was getting caked in completely gets sucked out of those options, and you can collect the premium from both sides. So if we take a look here at the moment, guys, this is looking absolutely perfect. We're set to open up right around, call it 295-ish to 300. Nowhere near the 345 calls. We're well above the 285 puts. If we can open up anywhere in these territory, the 285 puts that we shorted are going to lose a bunch of value. The 345 calls that we shorted are going to lose basically all their value. And we collect all that premium, guys. So max profit on this is about $500. These aren't trades that I necessarily go big into. Just looking to take a high probability trade and pay a couple of bills. So that's that there, guys, with Lulu. To update y'all on a couple of positions I'm holding, earlier in the week, I got a swing trade entry in Tesla playing the 4-hour squeeze. So we came into Monday in a beautiful 4-hour squeeze. On the first dip, guys, I shorted puts down here at 850. Got the first explosion, went into an hourly squeeze, got another explosion, making an all-time high, cracking through 1,000, and fading off with the market here. However, we got some sweet cushion left, guys. We're still bringing in premium from that put credit spread, and I'm liking this one here, so I'm going to continue to hold on to Tesla. And, we'll see if this thing, guys, can make another rip through 1,000 today. Even with the market being a bit sketch, Tesla can do some crazy stuff. So that's a great swing trade position, guys. Going to continue to hold on to that one. And then yesterday, right? Yesterday, guys, Same deal here. Coming into Monday, we had a 4-hour squeeze on Beyond Meat. Inside the squeeze, I was short and puts down here at 125. Right, so I was short and puts, guys, at 125. A couple hours later, the stock explodes, goes up 22%, and then completely rolls over. So on this drop yesterday, guys, it's completely coming back. However, because I shorted puts down here, I actually still had some profit left. So I closed that swing trade for a decent little profit, guys, but here's the thought process. Because of the huge drop, the put premiums are going through the roof. If I can get out of my original position and actually make a little bit of money, now I can actually, if I want to, re-enter a new swing trade going further out the money with a better risk reward. So sometimes, guys, your original trade, if you can sneak out of there with some decent profits, you might be getting an opportunity to swap that over for an even better position. So I didn't re-enter. We're making a nice move here this morning, guys. I will keep an eye on this. There's a little bit of news circulating around Beyond Meat here. And if I do take another position, I will let y'all know. But those are my thoughts, guys, heading into this morning. We'll see how ES fares here today. But for me, I'm just going to focus on those big picture levels, guys. 21 EMA, if we end up dropping back below it, keep an eye on that 200 SMA below. I wish you guys all the best of luck. If you haven't already, subscribe. And for everybody who has already registered for the swing trade course, which is in about 20 or so days, guys, got much love for y'all. So finish strong today, guys. Stay safe, and I'll talk to you all in the next one.